This is the first royal NFT. Okay? Queen Elizabeth in on that?
The knighted NFT, the holy NFT.
Hey, Bankless Nation. Happy first week of April. This is the first week in April 2022 that we are doing what, David?
Oh, we're rolling up the week in crypto, Ryan, where we condense the entire week of cryptocurrency, which is always an ambitious endeavor, yet we persevere nonetheless. So many crazy things happened this week. Gosh, Ryan, you want to tell us about it? Give us the tease. Tease us what happened this week.
Okay, I'll give you the little tease. So Elon Musk just became the largest shareholder in Twitter. And for those of you who are like, that's not crypto news. Well, Twitter is like crypto social governance protocol, basically. It's a lot of the social layer of crypto happens on Twitter. So we're going to talk about that. The UK, United Kingdom, is minting an NFT. This is the first royal NFT. Okay? Queen Elizabeth in on that?
The knighted NFT, the holy NFT?
It's a very special royal NFT. So we're excited about that and the UK talk as well. Also, the stablecoin wars are heating up. If you haven't heard of the stablecoin wars, we'll talk about them. There's this thing called Four-Pool on Curve. There's a lot of detail here, but the key thing is stablecoins are getting aggro with each other, like communities coming after one another and like trying to conquer market share.
While Do Kwon is trying to basically kill DAI, according to his own tweets. Meanwhile, MakerDAO is making deals with Tesla at the same time. So there are some deep things to be talking about in the stablecoin wars this week.
Luna is also buying Bitcoin and AVAX, so that's what we're going to be talking about. Not ETH though, so that's interesting.
Political choice.
A lot more to say about that. Okay, guys, before we get in, we want to tell you about this really exciting NFT opportunity. All right, so this is an NFT that goes to a good cause. That's the first thing you need to know. So it is National Awareness Day for HIV and AIDS on April 10th, and MAC, the makeup company, CONSENSYS NFT, they're teaming up to present some art by the artist Keith Haring. Some fantastic art here embodied in an NFT, and all of the proceeds go to support those youth affected by HIV and AIDS. So really cool opportunity if you've never partaken in the NFT sort of shenanigans, as David calls them. This is a good starter NFT. Some of the lowest tier mints cost $25, and then upwards of there's a limited supply. And the art is really cool. David, Keith Haring, I've had an opportunity to look up more of his art, and I'm sure you've probably seen it in pop culture references, but he's done some incredible work here in the past.
Yeah, I didn't know the name Keith Haring, but I knew the art by Keith Haring.
Same.
It's very iconic art. And so this is actually a pretty interesting opportunity. We have a very big company, MAC Cosmetics, pairing up with CONSENSYS, one of the biggest crypto companies, using the art of Keith Haring, an absolutely massive artist in the space, to make some NFTs where 100% of the revenue from these NFTs is going to youth HIV/AIDS awareness. So just a lot of cool things all in this NFT project. And so perhaps this might be the NFT project for you. Maybe you don't, maybe you're looking at all these monkey pictures and all these all the weird NFTs. But if you want to get into an NFT and also feel good about it, maybe this is the first NFT for you if you've not yet minted an NFT.
So if you want to hear about that, sign up so you don't miss it. Go visit the link in the show notes. It's bankless.cc/capital M, capital A, capital C, and you'll be directed to that where you can sign up. David, some other things going on is we are doing an episode on Treasure DAO.
Treasure ecosystem.
And I think that's cool in and of itself, but also this is a new show series that we're playing around with. Tell us about this, David.
Yeah, we're calling this the Alpha Leak series. Basically, any time that there is a community out there who wants to present the bull case for that community, Bankless is here for you. So I started out with this whole series with MakerDAO, and then this is going to be the second show in that series, Treasure DAO. And so I'm just posting on Twitter, it's like, who should come on next? So if you are a part of a community and you think that the bull case for that community needs to be heard, make sure you're following Bankless and me on Twitter, because I will always listen to who gets the most energy into these tweet threads. You got to get that engagement, Ryan. And that's how we decide who's coming on next, is who wants this the most. So Treasure, the ecosystem, really, really vibrant community, had never been on Bankless before, but now they will be. And so your community can be on Bankless too. So yeah, stay tuned for more.
I can't wait for the Cardano episode, David.
Oh,
It's gonna be
God.
a great one.
What did I just do? Oh, no.
I think you may have said too much.
Yeah.
Speaking of saying too much, though, I don't think we're doing that in the Bankless Alpha report, but there is a lot disclosed in the Alpha report, a lot of alpha. Okay.
So this is where you get your alpha. There is, I think, a growing need for people that are really just paying attention to the token ecosystem as attention goes from one token to another. The Bankless Alpha report is where you get an understanding as why is attention going to where it is. So this is coming off of analyst Ben Giev. He's a super hungry Zoomer analyst in the DeFi space. He's the methodologist behind the GMI index, and he pays attention to DeFi more than anyone that I know. He is on the bleeding edge. He is on the frontier. And so he is covering the hottest tokens that have captured people's attention in the last month or so. He's explained why they've captured attention. And then he gives his rating: overweight, underweight, or neutral, along with some price targets and some analysis and justifications as well. This is going out to Bankless Premium subscribers for those that pay $22 a month. And this will be an ongoing thing every single month to capture some of the hottest themes and the biggest alpha that Ben discovers, Ben and the rest of the Bankless analyst team discovers in the DeFi space. So if you are a Bankless Premium subscriber, this alpha report is coming to your inbox today. Friday, as you are listening to this. So go check it out. You can see the preview here, but the text is hidden. And so expect this to come out every single month, and it just will always be a rotation of the hottest tokens that are in people's mind share every single month. Ryan, anything to add to that?
No, dude, I'm super excited about this because I actually want to know, right? It's like we're so busy with the day-to-day of kind of managing all of the news and the ecosystems, to spend the in-depth time that our analysts do in finding actual token opportunities and what the catalyst might be. It's something I don't have time for. So this is something I'm going to pay a lot of attention to, and I can't wait to read the entire thing. I've read part of it now, David, but I'm going to give it all my attention soon.
Speaking, we asked Ben to put in these digests to really bolster up the Bankless roll-up and what we talk about, but then we just realized, you know what? Let's just put it into a report. And so that's what we did.
Absolutely. Okay. Speaking of reports, I guess market report. What's the market telling us right now? Bitcoin, where are we at on the week?
It's a womp week, Ryan. Bitcoin is down 7%. Started the week at $46,000, hit a low of $43,000 to where we currently are at now at 43, and it's $43,600.
Okay, womp. We're down. Let's look at the 3 month. Still up a little bit.
Crabby up, uppy crab.
Year to date, we're kind of down-ish, but it's all been crab. How about Ether? What's that looking like on the week?
Ether Price started the week at $3,300, hit a low of $3,150. But it also had an interweek high of $3,550. Looked really good, Ryan. Trying to break out to the upside. It failed that breakout, and now the bears are in control again, but also not really because we didn't really break down below 3,100. So crabby week, but down overall, down 6%, I think. Yeah, down 6%.
Over 3K, it's a good day, is what I say.
And you know it's true because it rhymes. Yeah.
Yeah. It's true for anything. ETH Bitcoin. We'll talk about maybe why we're down on the week in a second, because I think some of this has to do with the Fed news this week. But before we get there, the ETH Bitcoin chart on the ratio, the all important ETH Bitcoin ratio. What's that looking like this week?
It's looking good, Ryan. Last week it was at 0.072. This week it is at 0.074. So above a little bit more than a 2% growth on the week. You can't be disappointed. We didn't really get the US dollar breakout that we wanted, but the ETH BTC, the risk appetite indicator, is slowly grinding upwards.
Okay. Crypto hungry for more risk, I guess. The BET index, which tries to moderate some of that volatility and that risk, a third. But that's a third Bitcoin, a third DeFi tokens, and a third ETH. What's that looking like on the week?
Yeah, down 7% on the week. Started at $122, currently at $113.
There we go. There we go. Gas markets. It was a lower gas week most of the time with some huge spikes, I think. Like the Gary V spike. We'll talk about that when we get to the news. But what's the average gas? What's this looking like?
Yeah, average gas last week was 40 Gwei. It has moved up to 44 Gwei. So Ethereum usage marginally increasing. There
you go. Well, let's talk about maybe why some of the prices are down. This is our Fed Watch. the Fed officials this week announced a plan to shrink the balance sheet by $95 billion a month.
That's a big number.
That's a big number, right?
Big number.
So this is reverse quantitative easing, quantitative tightening, I suppose. I don't know if these terms are still used very much, but 95 billion a month they are shedding. And this would shrink the Fed's balance sheet by 1 trillion per year, David. And the reason is, of course, this is on the back of concern about inflation. You know, it's not so fleeting, apparently, as the Fed was talking about last summer. It seems to be a sustained issue that the Fed is now dealing with. And so they're not only talking about, of course, shrinking the balance sheet, but also continuing to raise rates expeditiously was, I believe, a term that was used. And we saw some of the damage that came in the bond market as a result of this.
Oof.
So massive damage. This was like one of the biggest drops, I think, since the 1990s in the bond market. So the biggest drop we've seen in like 25 plus years.
On what time frame, though, just for the listeners that aren't looking at the chart, are we talking about from the end of November to where we are currently time frame?
No, this is a different chart. This is a different chart. Okay. I was just saying that in general. This is the iShares 20-year Treasury ETF chart, which is down 11% year to date. So in general,
it looks like a crypto chart, Ryan.
The takeaway is like people are getting out of bonds. What's interesting about this is stocks are still up, right? So you got bonds going down, stocks up. Like people don't want to be in bonds. People want to be in, I guess, traditionally they've been seen as risk on assets like stocks, like even crypto didn't take too big of a hit compared to bonds. And you sort of wonder if maybe the definition of risk is changing fundamentally. Like bonds are somewhat risky. Right. Like, I mean, you're looking at a federal government who's printing trillions per year. Every single nation state is printing so much money these days, and their deficits are getting higher. Their ability to pay them back without printing is becoming less and less likely. And so are bonds really the safe asset? I don't know. Maybe the market is showing some signs of that cracking. Of course, I'm not a macro economist. I just see the Fed doing some more tightening. Interesting that crypto didn't take quite as big a hit as I thought it might. And perhaps all of this is saying something to us. It's also saying that U.S. mortgage rates are up. If you're looking to get in a mortgage, the time was like a few months ago. Not so much now. Rates are up to like 4.5% almost now.
And the take I have here is that the volatility, the joke, the tweet is saying, this is not oil, this is not a meme stock or even a shitcoin, it's US mortgage rates, which is indicating the absolute like gargantuan run in mortgage rates from just like earlier this year where it was at 3% down up to 4.4%, which is like a big move in mortgage rates, apparently. Totally. But just also the speed and magnitude of the move is kind of what's caught a lot of people by surprise. And my take here is that the world is becoming more and more chaotic. As crypto becomes less and less volatile, the world around it is becoming more and more volatile. I remember in 2017, 2018, one of the conversations about why crypto will never work was like, oh, it's too volatile, it's too volatile. Well, the rest of the world has gotten a lot more volatile since then. And also since then, crypto volatility has dampened. So, you know, not really how I expected that to play out at the time, but the world becoming more chaotic makes crypto a lot easier, a lot more appetizing than previously.
Can I just say this? I feel like crypto has made me volatility proof.
Totally.
Like
totally.
If
you've been in crypto, man, you are prepped. You are prepped for the next decade.
You are totally prepped, like emotionally. Like you've been through like volatility wars. Like you are the veteran. And so when you go back to the regular markets, you see something like this, you're like, oh, is that it?
People are talking about this? Why are they talking about this?
It's always funny to see equities and people are like, a 4% shock to the market. Stocks are 4%, S&P's 4% down. I'm like, what?
I don't wake up over 4%.
4% in either 4%. Direction. How boring. No, thank you. Speaking of volatility, I guess, volatility of 3 Arrows Capital in their investment decisions I see. They're rotating back into ETH. We talked about this not last week, but the week before, where people are, of course, tracking their Ethereum addresses and seeing that 3 Arrows Capital, they just bought another 31,000 ETH. That's another $100 million. Not a lot, probably, for 3 Arrows Capital, but interesting. And I feel like this is part of the great merge rotation that we're about to see. Like even trading firms are like, okay, we know that merge narrative is going to be hot.
Is on. Yeah.
We want to be here. So that's what I think is happening here with 3 Arrows Capital.
Yeah, so I think the next steps for 3 Arrows Capital is after they are done rotating into ETH, you'll start to, they've already added the ETH tag back into their bios. I think this is Suzu. And like, at some point they're going to start talking about the merge on Twitter. Like this is what everyone's expecting.
Totally.
This is the game.
And a Bankless episode, maybe?
Yeah, probably.
I don't know whether we'll do that. We'll have to see when the time comes. Guys, we're going to get to the releases and, of course, the news of the week. But before we do, we want to thank the sponsors that made this episode possible.
MakerDAO is the OG DeFi protocol. The MakerDAO produces DAI, the industry's most battle-tested and resilient stablecoin. Using Maker, you don't need to sell your collateral if you need liquidity. Instead, you can spin up a Maker vault and use your collateral to mint DAI directly. With Maker, the power to mint new money is in your hands. The Maker protocol is extremely hardened and operated by one of the most experienced DAOs in existence. They've been here since the beginning, they've seen it all, and so you can mint DAI with the assurance that your collateral is safe. Soon, Maker will be present on all chains and L2s, so minting DAI can take place on Oasis.app, Zerion, Zapper, or any other DeFi protocol that you use. Follow Maker on Twitter @MakerDAO and learn from the oldest and most resilient DAO in existence. AAVE is the leading decentralized liquidity protocol, and now AAVE v3 is here. AAVE v3 has powerful new features to enable you to get the most out of DeFi, including isolation mode, which allows for many more markets to be launched with more exotic collateral types, and also efficiency mode, which allows for higher loan-to-value ratios, and of course, portals, allowing users to port their AAVE position across all of the networks that AAVE operates on, like Polygon, Phantom, Avalanche, Arbitrum, Optimism, and Harmony. The beautiful thing about AAVE is that it's completely open source, decentralized, and governed by its community, enabling a truly bankless future for us all. To get your first crypto collateralized loan, get started at aave.com. That's AAVE.com. And also check out the AAVE protocol governance forums to see what more than 100,000 DAO members are all raving about at governance.aave.com. The Brave browser is the user-first browser for the Web3 internet, with over 50 million monthly active users. Control your digital footprint with built-in privacy and ad blocking. Inside the Brave browser, you'll find the Brave Wallet, the first secure crypto wallet built natively inside of a Web3 crypto browser. Web3 is freedom from big tech and Wall Street, more control and better privacy. But there's a weak point in Web3, your crypto wallet. The Brave Wallet is different. Brave Wallet is built natively inside the Brave browser, no extension required, which gives the Brave Wallet an extra level of security versus other wallets. With the Brave Wallet, you can buy, store, send, and swap your crypto assets, and you can even manage your NFTs and connect to other wallets and DeFi apps, all from the security of the best privacy browser on the market. Whether you're new to crypto or a seasoned pro, it's time to switch to the Brave wallet. Download Brave at brave.com/bankless and click the wallet icon to get started.
Hey guys, we are back with the hot releases of the week. The first is it's Nitro
time.
What is that? Sounds awesome. Okay, here's what it means though. Arbitrum, very popular layer 2, optimistic rollup layer 2. They have just released the testnet version of Nitro. Okay, this is going to be a seamless upgrade, I believe. So there's nothing that folks have to do. And of course, this is still testnet, so it needs to go through the process and eventually get to their main net. A few things that this includes are, one, a custom-built EVM emulator. That's what they had previously. They're now replacing that with Geth. So getting a bit more standardized, I think, is part of what they're doing here. Of course, there's also the minimization of layer 2 costs. So gas fees on Arbitrum going down once this is implemented through batching and compressing. There's so much room for optimization. We've been talking about this for a while on Bankless with optimistic rollups and ZK rollups. But once you have the first version of these things where transactions are maybe still like 10 cents, 20 cents, 25 cents, $1. That's just the first version. Now all of these layer 2s are going through the process of just massive compression. And that's kind of the first pass of improvements into these ecosystems. And that's happening with Nitro now. The same is happening with Optimism as well. So it's really cool to see these upgrades.
Yeah, a couple paragraphs out of their article. Today, we throttle Arbitrum's capacity, but with Nitro, we'll be able to release these controls and significantly up our throughput. And while Arbitrum today is already 90 to 95% cheaper than Ethereum on average, Nitro cuts costs even further. When we eventually migrate Arbitrum 1 over to Nitro, it'll be a seamless migration from the current stack to the Nitro stack, so users will have an uninterrupted experience. The only thing they'll notice are reduced fees, increased capacity, and overall faster experience. So they have the test net, and then they have the current Arbitrum 1, and they're doing the Indiana Jones hot swap thing.
Yep.
If I was on the Arbitrum marketing team, I'd start calling this the merge, if I were them, just because like this is perfect.
Do you guys hear that? Arbitrum team?
Yeah, there you go. Some free advice, some marketing advice for you guys. Just the Arbitrum merge is coming. I think that if might be getting outside of my technical capacity here, but replacing the EVM emulator with Geth, I think is following in Optimism's footsteps of optimizing for EVM equivalence, which is a concept that I'm super bullish on. This is how you scale Ethereum out beyond the L1 and have EVM equivalence across all the L2s. It makes things very replicatable. Replicatable is anti-fragile. This is how crypto works. Really excited to get this Arbitrum Nitro out the door. And Ryan, I'm going to go ahead and guess that this is the last major thing that Arbitrum does before they launch a token. This is my guess.
Ooh, interesting. Well, I don't know if the team can either confirm or deny that, but we have predicted that 2022 would be L2 year. And by that, we also meant tokens. We definitely did. So give me all the stuff, Arbitrum. Yep. We want tokens. We want low gas fees. We want all of it. And it seems like they're delivering that. So super cool to see. Instadapp, really cool app. They just released a light version of their application. What's cool about this, I think, is the ability to get one-click DeFi yields. I almost worry that it's too easy. Like, look, I click that button, I start earning 10.31% on my ETH. I don't know how it works.
How do they do that?
I don't know how it works, but because I haven't looked at it, I'm sure it's throwing it into all of these strategies. There might be some leverage. You don't know the risk. Anyway, cool stuff from Instadapp. Let's talk about Layer Zero, not your Layer Zero.
God damn,
not that Layer Zero. This is a bridge application, a bridge platform that we were talking about last week in the context of receiving some funding. The interesting thing this week is a NFT project that has rolled out something that the industry and people are calling Omnichain NFTs. In fact, William Peaster did a fantastic overview of what Omnichain NFTs are, what they are, why they matter. But it's basically the idea of deploying an NFT, not just on one chain. You don't have to pick a Solana or a Polygon or an AVAX or an Ethereum, but deploying a little bit on each chain. And the application itself, I believe, sits inside of Layer Zero, right? So it's almost like a Layer Zero type of application. And the idea of an Omnichain is you don't have to mint on like one specific chain and live there. You can kind of pieces of the NFTs live on all of these various chains. It's a cool concept and something I think we'll see some pickup this year, and so does William Peaster. What are your thoughts here?
Yeah, having NFTs that change their expression based on properties is always interesting. Having one of those properties be which blockchain is it on is pretty cool as well. It's one of those things where I can't really immediately think of a use case for it, but I also probably couldn't have thought of a use case for the internet back in the 1980s. And so same kind of thing where it's just like opening up the design space to something completely brand new. Again, thank you for naming your project after my podcast.
Ghostly Ghost is the NFT project. By the way, this harkens to a podcast episode we just did with Olaf Carlson that's coming out on Monday for Bankless listeners, where he made the case that bridges might also be an application platform in the future as well. I wonder if we're seeing hints of that with Omnichain NFTs and Layer Zeros. We'll be following that closely, of course. icETH is a new interest compounding ETH index from Index Co-op, okay? This is a way to boost up your ETH yield as well. Super cool. I could tell you a little bit about where the yield is coming from, but I don't know all of the details. Here's a Dune Analytics chart describing the process, but basically it deposits Lido's liquid staked ETH token as collateral in AAVE, and then recursively borrows the ETH through AAVE, and then swaps more of that ETH for staked ETH. So it's kind of a margin play on your ETH to boost your yield on ETH using staking plus some AAVE margin. You could like do this yourself, but it would be a lot of work. And this asset that you can buy from Index Co-op essentially automates that entire process. What are we looking at as far as yield? Look at this. 10%, 10.1. Hey, that's where the Instadapp yield came from.
I guess so. That would just make way too much sense. And so, in theory, this should be risk-free if we remove away smart contract risk and other like DeFi exploit type risk, which is always a risk. In theory, this is risk-free, right? Because if the value of your ETH goes down, the value of what you also owe is also going down. So you're immune from US dollar fluctuations because you're putting your staked ETH as collateral to borrow ETH. And so these things move in tandem with each other, except one moves slightly higher than the other one over time. So in theory, this is a risk-free move to leverage up on yield if you are okay with taking smart contract risk and any other DeFi exploit risk that might come with this.
Yeah, I asked an analyst who's very familiar with this product what he thought about it. He said, good product, but non-zero blow-up risk. But it's still probably safer than leveraging on AAVE yourself. And it's really accessible to retail. Of course, the risks are the smart contract risk, as you said, and then any mechanical issues with the automated leverage and rebalancing sort of functionality that's going on. So there's definitely some risk here, but wow, 10% yield on ETH is pretty appealing with a single asset that does that. So Index Co-op bringing some cool products to market. David, what's this? Tracer having a competition?
Yeah, Tracer DAO having a trading competition, $25,000 in prizes and NFTs. It starts Wednesday, April 7th. That was 2 days ago, and it ends the 16th, and this is on the Arbitrum Wrinkleby testnet. This is ahead of Tracer DAO's coming V2 when they decide to go live on the mainnet with their V2 perpetual pools, which I'm really excited about. I'm already using Tracer V1, but the properties coming in Tracer V2 are definitely much needed. And as soon as those come about, we will be talking about that on Bankless and around. And Tracer. So if you want to come and be part of the Tracer trading competition and perhaps get up to $25,000, there's a link in the show notes for you to go participate.
Perpetuals products. They're the future. Super cool here to have them in DeFi. All right, let's talk raises. So the first is not quite a raise, I suppose, but is a lot of capital, so sort of counts. The Luna Foundation, that is LFG, they just bought $231 million worth of Bitcoin. They, of course, have plans to purchase $10 billion worth of Bitcoin. They've stated to backstop UST. I think they're at like over 1 billion now, like 1.3, something like this. So that in and of itself,
1.6.
Okay, 1.6. That in and of itself is a story. And by the way, if you'd like to hear kind of a debate about the merits of UST and maybe some of the risks associated with UST, tune into our podcast from earlier this week on the bull and bear case for that. That's one piece of the news. But the other piece of the news is this, David. Did you read this?
Yeah, this is an interesting choice. Buying Bitcoin to backstop your stablecoin makes sense. But in addition to that, the Terra LFG fund has bought $100 million of the AVAX token. And so that is a different choice than buying Bitcoin. And again, the idea is that we have these reserve currencies that help backstop the peg. And so it's like ammo in the bank to use if in case there's ever a lull in UST demand and UST removes its peg, you use the Bitcoin and the rest of your reserves to buy up the stablecoin to make sure the peg is maintained. Bitcoin, I don't think anyone really would question the choice to use Bitcoin as an asset to backstop this. The $100 million into the AVAX token, questionable. There is a big difference between an $830 billion market cap in Bitcoin versus the AVAX market cap of $23 billion. And so if you are going to backstop something, you need something that has strong assurances and extremely high liquidity and is going to be available for you in the time of need. In the time of need is AVAX token, which has a lower history of price than Bitcoin does, is not the same level of assurances that Bitcoin has. And like they've skipped from going from the number one crypto asset, which is Bitcoin, with an $830 million market cap, skipped over Ether, skipped over BNB, skipped over Solana, justifiably skipping over XRP and Cardano, down to Avalanche, down to the number 10 crypto asset. So this, in my mind, is not actually something that's in the best interest of the protocol. This is a political choice. This is like an alignment with the AVAX community because they're putting AVAX on the Terra balance sheet.
Okay, so it kind of depends here. From my my take is this: like, I don't think that Terra is actually prioritizing risk mitigation with a move like this. And in fact, that was kind of what we learned from our podcast earlier this week with the bull, Jose, who explained much more about the Terra ecosystem in UST, that the end game for UST and Terra is actually like utility. It's actually usage. And so the prioritization is not necessarily on risk mitigation with a move like this. The prioritization is on composable communities, right? Uplift, basically. So if I get the Bitcoiners on my side at Terra, what happens? Bitcoin price goes up a little bit, Terra price goes up, Bitcoiners are more friendly to my community, more likely to use UST. Oh yeah, we like UST and Luna. It's kind of a Bitcoin friendly, and a portion of it's backed by Bitcoin. How great is that? Do this, rinse, wash, and repeat. Do the same thing with the AVAX community. Now we've got a tie.
It is political. Yeah, we're saying the same thing.
It is political, but it's a move for not to backstop from a risk perspective. It's more to like pump the usage of this thing, maybe even pump the value of this thing, right? So AVAX now, the Avalanche community is like, okay, I'm excited about this. Number go up for Luna token, number go up for AVAX, because AVAX is only the second coin that LFG has purchased, and everybody wins. Everyone's happy. Now, whether you think that is a short-term game destined to fail, or whether you think that is a long-term bootstrapping phase sustainable thing that's going to bootstrap UST and Luna into the stratosphere, the strategy does make some sense from that perspective. But I would also say, I still make this claim, I'm not sure what the difference is between UST that is buying and custodying Bitcoin and AVAX for its reserves to backstop a currency and an actual bank.
Yeah.
Like, I don't see a lot of distinction here. It's kind of like, it's a bank, Jim.
This is what a federal bank does.
Looking a little bit like that. And that's some probably unresolved piece of the discussion. I think Jose made a lot of fantastic points in our discussion with him, but I was still not understanding how this is much different than a bank's balance sheet that is trying to prop up the value of its asset. So I've still got some more, I guess, due diligence or like, things to think through on that side.
I will throw a flag in saying that putting AVAX on the balance sheet doesn't make UST, the token, have more utility. Like, UST has the same amount of utility based on what's on top of the Terra blockchain. Putting AVAX in the LFG fund doesn't add to the utility of that token.
So here's what it could do, though. It's like the AVAX community now wants to adopt it more. Right. So AVAX now prefers DAI. And so, or excuse me, they prefer UST to DAI. Why? Right. Because UST is now backed by AVAX. Right. And so you're creating a composable community linkage there. And so that could increase the utility of UST.
So why would they skip over Ethereum, which has a much larger DeFi ecosystem, and go straight for Avalanche, which has a smaller, more nascent DeFi ecosystem?
Well, I think that is what you said earlier, which is the enemy of my enemy is my friend.
I actually didn't say that earlier in the podcast. That was in the Vitalik debrief.
Okay.
Guys, we just recorded an episode with Vitalik this morning. That debrief will come out in 2 weeks, I think. Yeah.
Yeah. I think that's what's going on. Yeah. Don't you? Or do you have another explanation?
I think, again, it's a political alignment, as in, like, let's band together all the subdominant L1s so that, together we can beat Ethereum. I think that's kind of what's going on here.
It's interesting. It's crafty. It's clever in a lot of ways. You got to hand it to him from that perspective. Does it actually increase or decrease the risk of UST? Not sure about that one.
Yeah, because Luna and AVAX and the AVAX token have to have such a high correlation with each other. So in the time of need, you need non-correlated assets. Bitcoin is still pretty correlated, but also, it's Bitcoin. It's much more stable. It would have made much more sense to have gold. If we're gonna just do this whole like centralized custody thing, like F it, let's do gold.
I don't know, put some DAI in it. How about that? I mean, really?
Because it's backed by real estate and Tesla, which is actually where we're going next in this story.
Well, let's talk about.
Oh no,
well,
we're not.
actually, is
we
that
have
next?
a few more things. No.
Yeah, a few more things first. So Wormhole, which is the bridge, you remember, had a big, massive hack, biggest hack, bridge hack in history until last week. Well, they've recovered from that. Crypto bridge Wormhole is seeking $2.5 billion valuation price tag in private token sales. I don't know. My mind's exploding at the valuation of these things. Now bridges are just valued as highly as layer twos. I don't quite understand it yet. Am I missing something? Are we collectively missing something?
This is the debate as to whether or not we live in a bridge ecosystem. There's the debate as in a layer 2 cryptographic bridge or cross layer 1 interoperability bridges, which I'm pretty sure, unless I missed something, the interoperability between L1 blockchains is not a solved problem. Maybe that's what they're trying to solve, but I'm pretty sure in theory it is a unsolvable problem. And so all layer 1 bridges are going to have to be centralized multi-sigs. And I don't think it can get any better than that at the fundamental level. This is, to what I understand about cryptography, which is more decent than most other areas of my technical knowledge. You cannot have a secure cross layer 1 ecosystem. And so these valuations on these cross layer 1 bridges, it doesn't make any sense to me.
Most of the bridges, and by the way, I think I am bullish on bridges, and I think as are you, bullish on bridges as a category, hugely bullish on them. But most of the bridges that we've seen are more layer 2 to layer 2, which makes a lot more sense.
Cryptographic bridges, yes.
Right. This is a multi-layer 1 bridge. But if you want the contrary opinion to that, listen to our episode with Olaf Carlson Wee. Because he's very bullish on bridges, and I think Polychain was probably involved in, I don't know if in this sale, but layer 0 for sure. Anyway, Wormhole's back, baby. Twitch co-founder, NFT startup, just netted $35 million in seed funding. So a Twitch co-founder starting an NFT startup, and in seed funding, he's getting $35 million for that. That's seed funding, David. That's not Series A. That's not Series B. That's I got a PowerPoint with some ideas. It's that level of seed funding. I don't know. Maybe it's just me. This week, valuations seem a little more ridiculous than usual.
What do you think we could get for 10% of Bankless?
I have no idea, David.
How much seed funding do you think we could get?
I think you could create a narrative. Bankless is a media interoperability bridge.
Cross blockchain.
Cross-chain for the
no one would believe
multiverse.
That.
Not doing it.
Sorry, we need to take this more seriously. This is my bad.
Chorus One, they are a staking ecosystem leader. They've been doing this since 2018. They're getting into the venture game. So investing $30 million into promising protocols. So staking company turns VC. Interesting.
Yeah, there's a discussion to be had there. I think we'll skip that one.
How about this? Boba Network valuation just hit $1.5 billion after a $45 million Series A round. Who's in this Series A? Companies like Crypto.com, Huobi, Bitmart, Will Smith.
Seriously?
Will Smith and Paris Hilton. Yeah, Will Smith.
We're trying to get Paris Hilton on the podcast, by the way. That might happen.
How about Will Smith? He's been in the news lately.
Paris Hilton first. She's smart and she's crafty and she's got some awesome NFT opinions.
Yeah. I'd be interested in hearing Will Smith's opinions about some things too.
You know what's interesting about this one, Ryan? $1.5 billion valuation on Boba Network. Boba Network is a fork off of Optimism, which also raised at $1.5 million not too long ago. L2 forks raising at the same valuations as the L2s themselves.
Can we call a narrative here? This narrative couldn't be more clear to me.
What? You mean the L222 narrative?
No, we've already called that. I'm talking about an alt L2 narrative that's coming. So I think a lot of the rotators of the world, I'm not calling anyone out, 3 Hours Capital, I'm not calling anyone out. A lot of the rotators of the world will be very excited to capitalize on this narrative because we've seen
on the off-brand layer 2s.
More obvious. Off-brand layer 2s that are community-backed and non-VC and more pure, that's going to be a whole thing. And non-Ethereum cabal, fork an Optimism, fork an Arbitrum, fork some ZK Sync technology, and create an off-brand layer 2 that now has capital from Jump Capital, Alameda, 3 Hours, the whole, and then pump that that token until the narrative's done, and then you rotate back into Bitcoin and ETH.
All right, I think I'll add that to the Bankless pitch deck. We're making an off-brand layer 2.
Good idea. All right, Lightning Network. It's still there. It's still doing stuff. $30 million, or sorry, Lightning Labs just raised $70 million to bring stablecoins to Bitcoin. That's the thing that they were trying to do over at Lightning Labs. Any thoughts on this?
I didn't know that was possible. Elizabeth Stark, who is the woman that you see on the screen, has been just relentlessly working on Lightning Network. Big open source developer, big believer. Has been the CEO of Lightning Labs for forever. Lightning Labs has been around for forever, so definitely deserves to raise a bunch of money. I do not know how stablecoins become a part of Lightning Network. That is new information to me.
They're trying. Maybe we will investigate that a little bit more as that matures. And actually, we see some stable coins. That's the first step. You got to see it.
Right.
Press release is easy. Crypto data firm, Coinmetrics. I love this data firm.
We love Coinmetrics. We love Coinmetrics.
They just raised $35 million in a funding round. So
I was trying to find the valuation. They didn't mention the valuation.
Didn't say.
Yeah. That part is hidden, but Coinmetrics has been around for a long time. Very useful website to get very accurate and true data about stuff. I use it all the time. If you have not yet tinkered with Coinmetrics, you should definitely try it out.
It's a Nick Carter startup.
Yep. Carter startup.
He was involved in this. Binance.us, they just raised $200 million in a seed round as well. That's a $4.5 billion valuation. Not to be confused with other Binance, which is like global Binance, I guess. This is Binance.us with its own $4.5 billion valuation. It's going the IPO route, David.
At a technical level, there's actually no formal link between Binance US and Binance, except for that actual Binance licenses out their branding to Binance US.
No way. I didn't know this.
I think there is actually no legal link between these entities.
Oh, wow.
Yeah.
Okay.
Other than I'm pretty sure CZ owns a significant share of Binance US, which is a legal link through the man himself.
I've never used it. Never used Binance.us.
Never used it.
Okay, let's talk about Near. So this is, I think, the last one in our raises. A lot of raises this week. They just raised $500 million after their latest funding round.
Wow.
I don't know what the valuation of this is. In the billions, for sure.
Certainly.
Another big war chest, $500 million.
Well, it's a live token, right? So you can just see the valuation based on the token.
Yeah, they got a little. I'm sure VC's got a little discount on that, and that's kind of how it works. This reminded me of the post
$15 billion total TVL, or it's not TVL, fully diluted valuation. $15 billion.
Remember this chart? We were talking about this with Vitalik earlier.
Yeah.
It's from his post. This is a chart. If you're on YouTube, you can see this. Major public chains, launch date versus insider allocation. And it's funny, the chart is basically showing the early chains had the lowest amount of insider allocation. Of course, Bitcoin had 0, unless you include the early insiders who are mining the thing, of course, which you might include that. But Ethereum, very low insider allocation.
Yeah, it's probably just talking about the $10 million presale, right?
Yep. And then even Cardano and Tezos and EOS, fairly low insider valuation. There were other flaws with EOS, for example, but low compared to today. We look at Near, it's over 60% insider valuation. And here's even more, right? Another private round with a larger valuation of insiders. I guess now the token is public, so you can kind of buy that and trade that. But it's just interesting over time that this is consolidated to a lot of early VC raises before the tokens have launched. And that's also true of layer 2s. We can't say that's not true of layer 2s.
Certainly.
It's just a product of the SEC.
Small clarification on this one. Near Protocol didn't raise $500 million. They have $500 million in cash after they raised $350 million on April 6th. So they raised $350. They have $500 million in cash, led by Tiger Global, FTX Ventures, Blockchain Ventures, Dragonfly Capital. And then previous rounds by 3 Arrows Capital, Alameda A16Z. What are they going to do with $500 million?
They're gonna hire.
They're gonna
talk about jobs.
$500 million. 500. I don't see Near hiring on this jobs board, Ryan.
Yeah, look, they're definitely gonna hire people. What else they do with it? I got to go to marketing. I'm sure. There's also future development. I'm not sure. I'm not sure what an L1 does with all of this money. I think we will see though. in the months and years to come. They're not going to go broke, that's for sure. Not at $500 million.
Bear market immune.
Yeah. Well, on the topic of jobs and hiring, which
And
is
money.
maybe where Near is going to spend some of its money, get a job in crypto.
Yep.
This is our weekly reminder to you that there are jobs awaiting you in the crypto ecosystem in Web3, and you can have them. You could see them. You could see more at bankless.pallet.com/jobs. I'm going to read out a few. Is that okay? You're sitting down. I don't know if you can dance like that, but
I've done it once before.
all right. Solidity Architect, number 1, Alu. Marketing Manager, Mesha. UX Designer, Prometheus Research Labs. That just sounds awesome. A Community Manager, the DGen Dogs Club. Where else can you get a job at the DGen Dogs Club? A co-founder for innovative Omnichain DeFi Primitive. We're just talking about the Omnichain. That's a TBD thing. It's in Paris. Blockchain engineers at Masari, software engineers, market data, Masari, operations manager, Syndica, senior product designer, Smart DeFi, senior Go Rust engineer, Syndica, senior full stack engineer, Syndica, senior software engineer, Airdrop Labs, product manager, Crypto Nori, Bankless web developer at Bankless, and a Bankless editor at Bankless. Still looking for those positions. We got some cool candidates. We want to see some more too.
For those who are going to Amsterdam, this is how I'm going to be dancing at the Rave that's happening.
There's a Rave in Amsterdam.
There's a Rave
again?
happening in Amsterdam, yeah.
What's the story? They can't have these on U.S. Territory, right?
No, I think they just chosen not to.
Okay.
Yeah.
I understand that. Like,
Yeah.
Europeans get all the good things.
Plus, their parties are better.
Do you want to move to news?
Sure. Yeah, let's do it.
Ethereum news. Remember the Axie Bailout, David? We were contemplating. We thought maybe it would happen. There's the biggest bridge hack in history, 625 million something. Who bailed him out?
Binance. But they didn't. Binance just didn't give Axie $150 million. There was a $150 million funding round. So we're actually still talking about raises. Binance gave Axie. They didn't. The details on it, what Axie gave them, are undisclosed. There's probably some like RON tokens, some AXS tokens, maybe a bunch of strange love potions. I don't know. But they got $150 million raised from Binance, which is going to help plug the hole for the users that lost the money. And so, I mean, it's not a complete bailout because they lost 620 million. And I haven't heard any news about like the fallout for where that money has gone. I think nothing's happened with it.
You mean like the people who
The hackers,
were missing
yeah.
the money? Oh, the hackers.
Well, like,
are
yeah,
still-
where's that money gone? I don't know.
I didn't hear anything about it this week.
Haven't heard a thing. But anyways, they are making amends with their community by raising this money. So anyone that lost money with Axie Infinity now has this $150 million to tap into to get some of their money back.
That's cool. Thought this would happen.
Yep.
And certainly the big capital pools are, using it as opportunity to get some equity, some more share in these crypto networks. This is interesting. Bakkt just inked a deal to offer Bitcoin and Ether buys and sells to American Bank customers. So American Bank is a community bank headquartered in Pennsylvania. What's interesting to me is now the banks are licensing crypto companies to sell their customers crypto. Right? How far we've come. The bank's going from like, oh, this is a scam, like cryptos. Now they are actively trying to find ways to sell crypto to their customer. When Wells Fargo? When are you guys doing this?
Right.
Won't be long.
if they had thought more openly about crypto like in 2017, 2018, and actually started to build in the bear market like the rest of us, they wouldn't have to actually go through other people's services in order to now provide crypto. They could have just done it themselves. But no, they were closed-minded.
David, not even one bank did this.
Not even one bank.
Not even one. It's all crypto native companies that are dominating the new crypto banking industry. It's not even any of the old legacy ones. And I'm surprised, to be honest, we haven't seen an acquisition of a legacy bank acquire a crypto native company.
Yeah, probably because crypto native companies are like, no, F you guys. Like, we have all the goods. We're going to buy you guys in 2 years.
Yeah, we don't need you.
Yeah, we don't need you.
Well, I mean, SBF came out and said that. He was like, yeah, we're going to buy Goldman one day. I don't know if that was a,
I think
Freudian
if
slip or what.
SBF could buy Goldman, he would buy Goldman. I think he would do that.
All right, this is what you were talking about earlier. What's this? Tesla and MakerDAO?
Yeah. Okay, so MakerDAO is pioneering into the world of real-world assets, and so they have these legal structures that are formed that allows the protocol to mint DAI based off of collateral from real-world assets. So Tesla is getting a $7.8 million loan from MakerDAO to finance Tesla repair facilities around the world. And this is just the first of what it could be many, many deals coming out of Tesla like this. I think that the next iteration on these are $12 million deals and like a series of them. So this is Tesla getting their feet in their toes in the water with getting loans from MakerDAO, just because it's an advantageous place to get a loan from when it comes to Tesla's balance sheet, which, you know, that's a delicate subject. Tesla's balance sheet is a delicate subject for Tesla, and getting a loan out of MakerDAO is really a great opportunity for them. And so this is actually not MakerDAO's first foray into real-world assets. This is them using this legal structure that they've created to allow and scale out the onboarding of real-world assets. And the cool thing about this, like, so people might be thinking like, all right, isn't this centralized, right? Like, this is going to be some sort of trusted centralized entity managing this loan. And you're right. You're totally right. The thing is, if there's 1,000 of these things, there's 1,000 different instances of centralized trusts managing real-world assets. That is itself decentralized. There isn't one trust. There isn't one organization that's managing the real-world assets for MakerDAO. Each individual deal is its own centralized deal. And when you add on like 1,000 of these things, well, then you have 1,000 centralized deals, kind of makes it decentralized. And so MakerDAO is pioneering into aspects of just crypto economics and adoption that no one else is doing. And so that's always why I get really excited about what they're up to at MakerDAO.
I feel like there's way more meme potential in this than we actually saw. Like, Elon just took out a loan from a DeFi protocol.
Right.
It's like the meme headline, and I didn't see that anywhere. Like, people aren't talking about this.
That's because MakerDAO takes themselves seriously, and they don't play in like the narrative meme wars, and that's why everyone thinks they're a boomer, but they're just heads down grinding all the time. I tweeted this out like last week, where of all the DAOs that are out there, MakerDAO has an order of magnitude more number of labor hours being contributed to it that are also effective labor hours than any other DAO. And it's just because they're heads down building, bruh.
Interesting. Bruh. There you go. Well, you are the Maker Bull among us. Mm-hmm. All right, 4 pool.
By that sound, I think that makes one of us.
Look, man, I read the Bankless Alpha report and it's neutral on Maker, so I'm neutral right now on MKR.
All right.
Stablecoin wars. This actually leads to the stablecoin wars, though, because DAI is, of course, a dominant decentralized stablecoin on Ethereum right now. But UST and Luna is really looking to change that. They're looking to take over. They're looking to come into DeFi and take away market share explicitly from DAI. And how do they do that? The curve wars. That's what the 4 pool is. Can you explain some of the background on what's going on, what the 4 pool actually is, and how it's significant to the stablecoin wars?
So the current status quo with Curve is the 3 pool, which is a combo of DAI, USDC, and USDT. The Curve Wars has deemed that it's appropriate to incentivize this pool. So there's a lot of liquidity between these things. So Do Kwon has proposed the 4 pool, which is adding UST, removing DAI, and then also adding Frax. And so instead of the 3 pool of DAI, USDC, and Tether, we now have Terra USD, which is non-native to Ethereum, although it is a decentralized stablecoin, adding Frax as well, and then also the USDC and Tether stablecoins. And so this is Do Kwon, first off, getting UST into Curve. So that is getting UST into the stablecoin liquidity ecosystem. Curve is basically where stablecoins get liquidity. So it's really, really mission critical for stablecoins. And not only is he submitting a proposal to inject UST into Curve, at the same time, he is proposing a pool without DAI. So if the Curve Wars decides to vote that this is where they're going to incentivize stablecoin liquidity, this would be a knock against DAI liquidity inside of DeFi. DAI has other liquidity sources, so it's not only in Curve, but like losing Curve does suck. And so this is Terra taking an active stance, protocol wars, stablecoin wars against MakerDAO.
Yeah, it's interesting, and like working directly with Frax to do that, right? And I think we're going to see more of these like cartels that try to like team up and dominate. It's just a lot of game theory going on with these adversaries as they're chomping to try to get stablecoin market share. And it's not only that, it's also like not only alliances, but it's also like narratives that like we're seeing this in the phase. Like there's a lot of vitriol between these communities. DAI versus UST. I don't think I fully realized that was a thing, and that these were like Bitcoin and Ether level like crypto conflicts. The communities had a lot of beef with one another until after that episode that we just did earlier this week.
Well, no, you're totally right. That wasn't a thing until this is starting it. This is formalizing the wars, right?
Yeah.
I was in the MakerDAO Discord, and they were like using the I don't think about you at all GIF.
Like the John Hamm from that.
Right.
Like,
It's like why is Terra so obsessed with Maker and moving out DAI, because DAI doesn't think about Terra at all. We'll see if that is a viable strategy. Like, can MakerDAO just be heads down building forever and just like kind of just focus on fundamentals, which I think is admirable, but also is
it winning?
Is it
the
winningest strategy?
It's admirable.
I don't know. I don't know if it's the winningest strategy.
Yeah, that's
maybe
a
that's why the alpha report is a neutral on MemKR.
Oh, it's TBD on what Maker does next. NFT news. Let's move to that. Pudgy Penguins. They just tripled their floor price. I thought this project was like dying, dead,
going close
founder
to zero.
abandoned. Yeah, abandoned by the founder. What happened here?
The Pudgy Penguins floor was kind of more or less trending towards zero, but then zoomed up to, I think, at like 2.5 ETH for the floor, because the team has announced basically a roadmap of sorts, including a metaverse game, an airdropping a token, kind of taking the Bored Ape Yachts Club playbook and saying, hey, we're going to do that too. And so then as a result of that, the floor price mooned. I still have my penguins, but...
it's interesting to me. It's like, what kind of opportunities there might be in the future for investors. You know how like private equity firms would go and buy struggling companies, replace management, turn them around, like boost up the value and then sell them. That's what private equity is, basically. Tons of firms like this. I mean, you could do the same with NFT projects as well, right? Yeah. You take a struggling NFT community, put in new leadership, create a compelling roadmap, buy it cheap, and then flip it. Yeah. I wonder if that's a little bit what's going on, but it seems like opportunities for investors in the future.
Yeah, that's exactly right.
Teenage Mutant Ninja Turtles. They are coming to an NFT collection near you, spring 2022. Unbelievable, man. For people's childhood, Ninja Turtles are back.
Did I ever expect us to be discussing Teenage Mutant Ninja Turtles on Bankless? But like with NFTs, anything is possible.
Yeah, we used to take ourselves way more seriously. Now it's just... Turtles all the way down.
Nice.
LooksRare. They just created a chat button in their marketplace using Etherscan. We talked about this Etherscan chat a little bit. This is Ethereum address to Ethereum address messages, almost like an AOL kind of chat feel. And now LooksRare is incorporating it, which is pretty cool.
I really like that, actually, because Etherscan has never... People just like link to Etherscan. This is the first time I've seen Etherscan actually integrated into somebody else's front end.
That's
really cool move by Etherscan. And I kind of want them to keep on doing stuff like this, because Etherscan is the one thing in crypto that like I just 10 out of 10 on just what the product.
Love it.
Also just like it's always up. Like we all take it for granted how awesome Etherscan is.
We do.
And I'm very like solid team from what I can gather. Like I would love to see what happens if they start to get a little bit more ambitious with what they can do. Yeah.
They could do a lot for sure. This is an NFT project that was really big this week. VaynerSports, which is Gary Vee's brother, apparently. They just launched a VaynerSports Pass, which is an NFT. They sold out super quickly. And that's part of the story. The other story of this is it spiked gas fees for a period of time, fairly significantly.
Bigly.
Now, such that a lot of the transactions to purchase and mint these NFTs actually failed. And so looking at this tweet, David, a total of over 7,600 ETH was spent just on failed and successful transactions on the VaynerSports Mint. And so that is $26 million of gas spent to try to mint this thing and to actually succeed in minting it in some cases for a total of $8 million in NFT sales. So people spent $26 million to mint $8 million in value. Sort of weird. Yeah.
So the takeaway is that why didn't they do this on the layer 2? Like they've already done, like Gary Vee has already done NFT minting on a layer 2, and so there was let's see, 26 plus 8. So what is that? $34 million worth of demand for these things, and VaynerMedia only collected $8 million of that. And so if people were willing to spend $34 million, of which we know that they were because it's provable and on chain, they could have collected $34 million instead of $8 million by doing this on a layer 2 like Immutable or something like that. And like, you know, there you wouldn't have had the congestion, but instead they did it on the layer 1, which we know is a bad place to mint NFTs, even though people like their NFTs on layer 1. You know, they should, question mark on that one. And meanwhile, 4,000 Ether got burnt from this inside of just like not even an hour. It was like inside of 1 hour, 4,000 ETH got burnt. I think the largest single block of ETH burn was 150 ETH inside of one block.
Wow.
Yeah, pretty crazy.
That's a lot of money spent, a lot of money wasted, you would say, on this. So
thank you for your contributions to the security of Ethereum.
I can't continue though. Can't continue. Got to start minting more on layer 2. Let's go to Bitcoin stuff. Of course, MicroStrategy weekly update that they just bought more ETH, $190 million worth of ETH. So Michael Saylor just continuing to dollar cost average in. We say this almost every week.
And this is such a Sazzle tweet. Anthony Sazzano says, Saylor started buying Bitcoin in August of 2020 and so far has accumulated 129,000 Bitcoins worth 5.6 billion, of which he can sell whenever he wants. The Ethereum network started burning ETH in August of 2021, and in that time has burned 2 million units of Ether worth 6.6 billion, which can never, ever be reintroduced into the marketplace. And then I follow up saying, and Ethereum has basically infinity ammo, whereas Michael Saylor only has so much more ammo left in the tank, you know?
We've got the infinity ammo Michael Saylor buyer, always buyer of Ethereum, I guess, always buying and burning the ETH that we don't even appreciate.
The protocolized version of Michael Saylor in EIP 1559.
Well, it's funny how the Michael Saylor stuff makes headlines every single time when he purchases.
It's a meme now. Yeah.
But the Bitcoin burning is not the same.
ETH burning? Yeah.
Yeah, the ETH burning. It's quietly
happening behind the scenes. Just burn.
Silent burner. Other Bitcoin news. There's a big conference going on, David, and Bitcoin Miami conference is that what's happening?
Bitcoin 2022 in Miami, yeah.
The mayor of Miami just unveiled a Bitcoin Bull. Is that what we're looking at here?
Yeah, there is a new which is an allusion to the bull on Wall Street. There's now a Miami Bull because Miami's like really taking the charge on just the crypto industry, especially the Bitcoin industry. And so now there is the mechanical bull for Miami to go along with the metal bull that's on Wall Street.
That's interesting. Are a lot of Bitcoiners moving to Miami? Like Nick Carter moved there. Isn't Anthony Pompliano in there too? Miami? Am I wrong about that?
I don't know though. Yeah. But yeah, Miami has taken in a lot of those like tech entrepreneurs being very pro crypto. Being like a bastion for crypto, especially for Bitcoiners, because it's the right culture for them, I think.
Let's talk about some regulatory stuff. So the UK is getting bullish on crypto. The UK's finance minister just said, it is my ambition to make the UK a global hub for crypto asset technology. Pretty big words coming out of a government official. And maybe they have some proof as well. So they're minting NFTs, David?
A royal mint. This is an actual graphic out of the HM Treasury. What's HM stand for?
Her Majesty's.
Her Majesty Treasury. The Royal Mint NFT, the first ever minted NFT by the royalty of the UK. This decision shows the forward-looking ambitions or forward-looking approach we have determined to take towards crypto assets in the UK. The first royal NFT. All right.
That's amazing.
Never did I think I would ever see.
The UK government actually minting NFTs. That's where we are in 2022.
Royal NFTs, right.
Royal NFTs. Thank you. Yes, not regular NFTs, not your average Ninja Turtle NFTs. These are royal. I do think that every jurisdiction is going to be fighting for crypto, like fighting for crypto legitimacy in the coming future. And it's starting to happen because I think governments are realizing that crypto is a winning proposition, that it's going to be an engine of the future economy, and they want to be part of it. This is the tailwinds crypto has, and why I think long run we win the regulatory battles, all of them. So we're starting to see evidence of that. Let's talk about Elon Musk. David, what's he up to?
Oh, just being Elon, just chatting into 9% of Twitter. Oh, I got ahead of myself. Okay, so Elon Musk last week tweeted out, "Free speech is essential to a functioning democracy. Do you believe Twitter rigorously adheres to this principle?" And then he had a poll, yes or no. He followed up with that poll saying the consequences of this poll will be important. Please vote carefully. No one really knows what he meant. Anyways, I think 70 people said no to that question. So people think that Twitter does not function.
70%.
70% says Twitter does not rigorously adhere to the principles of a functioning democracy with regards to free speech. Later, we would discover that Elon Musk bought 9% of Twitter. 9% of the whole entire company, and then is getting invited onto the board of directors. This is Parag Agrawal from Twitter saying, "I'm excited to share that we're appointing Elon Musk to our board. Through conversations with Elon in recent weeks, it's become clear to us that he would bring in great value to our board. He's both a passionate believer and intense critic of the service, which is exactly what we need on Twitter and in the boardroom to make us a stronger in the long term. Welcome, Elon." And then Elon responds to that and says, "Looking forward to working with Parag and Twitter board to make significant improvements to Twitter in the coming months." Elon's got some opinions as to how Twitter should be, and he's buying 9% of the company in order to express those opinions.
Wow. Well, he is a Twitter super user, I'd say.
Totally.
He's one of the top 0.0001% of all Twitter users. So I guess it's the Buffett adage of buy what you know.
Yeah.
He clearly loves this product because he's on it all of the time. But what do you think? What do you make of this? Do you think he's going to advocate for more free speech? And how does that actually happen on Twitter? I mean, Jack Dorsey always talked about turning Twitter more into a protocol and less of an application, but it never actually materialized. Do you think that's the direction Elon takes this in?
It's hard not to take a Web3 framing on this, but also at the same time, I just don't know how Elon would do that of all people. Elon's not yet into the world of Web3. He's not yet Web3 pilled. He's getting there. He's getting close. I do not know what he's up to, Ryan.
Elon Musk on the Bankless podcast, maybe sometime this year, David. That'd be amazing.
Maybe.
Love to see that. Last thing before we get to the takes, Virgil Griffith. This is a sentencing of Virgil Griffith right now. We can talk about the sentencing in a minute, but could you do a quick recap of the story, David?
Yeah, Virgil Griffith, I believe he worked for the EF. He's been an Ethereum developer for a long time, but he's also been in jail for a little over a year now, I believe. He was jailed for going to North Korea and giving a presentation on crypto and blockchain. What was in his presentation was common knowledge. Is what Virgil Griffith is claiming, what people around him corroborate. So it's not like he was giving North Korea a secret blockchain alpha. It's stuff that you could learn on YouTube. But the act of going into North Korea, which is not an illegal act, but then giving a presentation about blockchain tech has been deemed to be I'm not sure if it's treason that's the charge, but treasonous activities-ish by Virgil Griffith.
Sanction evasion for sure.
Yeah, sanction evasion, yeah. And so he's been in jail waiting to have his sentencing, and here's his sentencing today. I don't know if this is official. Ryan, is this official?
I believe it is. I haven't read through the full document though, but I think the headline is between 63 and 78 months of imprisonment in addition to a $1 million fine. And we'll include a link to the document so you can read it. It has this image, though, which I did scroll down and see, which is Virgil giving a presentation. You can see on the whiteboard. I'm sure the government kind of used this in their case against him. No sanctions with a smiley face.
Uh-oh. Government
kind of making their case here.
Yeah, but once again, the first thing you learn about when you learn about crypto is that you can evade sanctions. Is he getting in trouble for writing that on a whiteboard?
I mean, no.
It's a bad look, Virgil. It's a bad look. But also at the same time, there's nothing new here.
It's also true in a way, no censorship, no sanctions.
Right.
Again, readers can read the entire report in the case of the government and draw their own conclusions here, but be very careful what you write on whiteboards, and
especially if you're in North Korea.
Yeah, well, just don't go there. Is the first bit of advice, guys. We will be back with the takes of the week, and of course, what we're excited about. But before we do, we want to thank the sponsors that made this episode possible.
If you're trying to grow and preserve your crypto wealth, optimizing your taxes is just as lucrative as trying to find the next hidden gem. ALTO IRA can help you invest in crypto in tax-advantaged ways to help you preserve your hard-earned money. ALTO Crypto IRA lets you invest in more than 150 coins and tokens with all the same tax advantages of an IRA. They make it easy to fund your alternative IRA or crypto IRA via your 401k or by contributing directly from your bank account. There is no setup or account fees, and it's all you need to do to invest in crypto tax-free. Let me repeat that again. You can invest in crypto tax-free. Diversify like the pros and trade without tax headaches. Open an ALTO Crypto IRA to invest in crypto tax-free. Just go to altoira.com/bankless. That's ALTOIRA.com/bankless and start investing in crypto today. The Layer 2 era is upon us. Ethereum's Layer 2 ecosystem is growing every day, and we need bridges to be fast and efficient in order to live a Layer 2 life. Across is the fastest, cheapest, and most secure cross-chain bridge. With Across, you don't have to worry about the long wait times or high fees to get your assets to the chain of your choice. Assets are bridged and available for use almost instantaneously. Across bridges are powered by UMA's optimistic oracle to securely transfer tokens from Layer 2 back to Ethereum. A token proposal is being deliberated as we speak in the Across forum, where community members will decide on the token distribution. You can have your part of Across's story by joining the Discord and becoming a co-founder and helping to design the fair launch of Across. If you want to bridge your assets quickly and securely, go to across.to to bridge your assets between Ethereum, Optimism, Arbitrum, or Boba networks. Arbitrum is an Ethereum Layer 2 scaling solution that's going to completely change how we use DeFi and NFTs. Over 300 projects have already deployed to Arbitrum, and the DeFi and NFT ecosystems are growing rapidly. Some of the coolest and newest NFT collections have chosen Arbitrum as their home, all the while DeFi protocols continue to see increased usage and liquidity. Using Arbitrum has never been easier, especially with the ability to deposit directly into Arbitrum through all the exchanges, including Binance, FTX, Huobi, and Crypto.com. Once inside, you'll notice Arbitrum increases Ethereum speed by orders of magnitude for a fraction of the cost of the average gas fee. If you're a developer who wants low gas fees and instant transactions for your users, visit arbitrum.io/developer to start building your dApp on Arbitrum. If you're a degen, many of your favorite dApps on Ethereum are already on Arbitrum, with many moving over every day. Go to bridge.arbitrum.io now to start bridging over your ETH and other tokens in order to experience DeFi and NFTs in the way it was always meant to be: fast, cheap, secure, and friction-free.
Hey guys, we are back with the hot takes of the week. The first one from Nick. One confirmation, he's a venture capitalist. Since Genesis in 2015, it's Ethereum Genesis, Ethereum has led every bull market. In 2017, ICOs, 2020, DeFi, 2021, NFTs, 2022, merge. Led every single bull market. That's the take. What are your thoughts?
I've been arguing on my older show, which I don't do anymore, POV Crypto, which is me and then the Bitcoin Maxi. He was always trying to say, it's the halvening cycles, man. It's the halvening cycles. And I'm like, what do we call the 2017 bull market? We call it the ICO mania. Like, that was Ethereum's bull market. Like, Bitcoin went from like $1,000.
It wasn't the halvening mania?
It wasn't the halvening mania, man. Bitcoin went from like $1,000 to $20,000, but Ether went from like $30 to $1,400, and then every other, like the bull market for 2020 got kicked off with yield farming. We had the inflation narrative in the background, so it's not like Bitcoin couldn't pull its own weight, but like it was known as DeFi summer, man, not inflation summer. And like it's been NFTs, and now what Nick is now claiming is going to be 2022 is the merge hype. And so, like I wrote in that Market Monday a while ago, like if Bitcoiners think that Bitcoin halvenings can trigger bull markets, what do you think a triple halvening in Ethereum will do, especially when Ethereum is bigger than Bitcoin ever was at any other previous halvening except for the most recent one?
It's going to be good for Bitcoin too, because all of these bull markets being led by Ether also, number go up for Bitcoin. So Bitcoin, you're welcome.
You're welcome, Bitcoin.
That's what we're saying. You're welcome.
Yeah.
I know
you're not secure in of yourself, but with Ethereum, we'll pump your number up so you can be secure for a longer amount of time. Bring a friend.
You want to do this take?
Oh yeah, I know this guy. Ryan John Adams tweets, "If you get into crypto to make life-changing wealth overnight, you'll probably fail. But if you get into crypto to make life-changing wealth over a decade, you'll probably succeed." Ryan, why is it easier to do it over a decade than it is overnight?
Oh, you don't even have to think, man. You just like buy, hold, stake. That's it. 3 things. You don't have to sell. You don't have to like figure out what to ape into, what to trade. I do think that the problem with a lot of people in this space, or the problem that they're going to have in this space, is they just think too short term, right? I want to buy this thing because like, what's the next thing to do 100x, like, some token or the next NFT project. And I don't think most of the people I've met in the space that have done really well have just been people who've been in the market for a long time and bought and held. And I think it's so attractive to try to play the trading game, but most people are not going to make money that way. And thinking short term is like the way to lose in this market. So that's all. It's just a reminder of if you're trying to make life-changing wealth in crypto, it's actually not that hard. The things you need to do are not difficult in terms of complexity. The only difficulty is you have to have the long-term time horizon, and that's more a temperament discipline type of thing than it is like actual intelligence. It's not really that hard to buy good crypto assets and hold them for 10 years. And if you do that, I think you will do well. It depends. Maybe life-changing wealth, it depends what that means to you, but that's certainly the way to do it.
The people really get FOMO in this industry, obviously, because that's what happens when you have provable scarcity. People don't get FOMO over dollars because they'll just print more of them in the future. But as soon as you have like a supply cap with Bitcoin and you have like the ETH burn, the deflationary of ETH, then people start to get FOMO, right? And then they also, when you get into crypto, everyone feels late. That is the first sensation that everyone feels after they start to have their aha moment about crypto. They're like, oh, I'm late. So what do they do? They take leverage, they go down to risky moon tokens that are short-term thinking, and then they forget about how this is the largest wealth transfer event ever in human history, and they forget to be patient, and they try to catch up with the OGs by taking leverage and doing really risky stuff. Then they lose their money, and then they're even more behind. So the best thing to do is just buy, hold, and have patience and listen to Bankless.
Totally agree. Okay, let's do this take. This is from Hasu. Why don't you read it out?
Yeah, Ryan once upon a time debated Hasu about a similar subject back, I think in like 2019 or early 2020. Hasu tweets, well, first off, there is a Twitter thread by a Bitcoiner, Alex Thorne, who says, Bitcoin fees are at all-time lows. The craziest thing, fall 2021 was the first bull run not accompanied by a major spike in fees. How is that possible? What does that mean? Here's a thread explaining the most confounding and awesome chart in Bitcoin. And then he makes a thread about like explaining like why Bitcoin fees are going down even though when price is going up. But Hasu just says, ignore all that. And Hasu just says, it means Bitcoin is effed long term, but okay, keep brainwashing people with ridiculous positive spins. So this is less about Hasu's take, even though I think both Ryan and I agree with his take. It's more about Hasu once upon a time was taking the other side of this argument. Like Ryan and Hasu had a debate on the the Block Crunch podcast, and Ryan was, of course, arguing pro Ethereum. Hasu was a Bitcoiner. At the time, I'll say Hasu was a moderate Bitcoiner. But the difference in opinion that Hasu has now about Bitcoin sustainability is just night and day from where we saw it in 2019.
Yeah, and I will give Hasu some credit for this too. So we had that debate, and then it was kind of like later, he actually did some due diligence and some research, and he came out with a paper. I don't know if this was 2019 or 2020, about basically the lack of sustainability. Here it is, Uncommon Core, the paper. I remember reading this, 2019. Yeah. So the lack of sustainability of Bitcoin's block subsidy. He was still like bullish Bitcoin at the time, but I think he recognized this issue. And I think this is Hasu reflecting, hey, 3 years later, this hasn't changed. Like there's no fix.
It's getting worse.
It's getting worse.
The Bitcoiner is saying the crazy thing that fall 2021 was the first run not accompanied by a major spike in fees. That is an uh-oh moment for Bitcoin.
Yeah, you should be like,
you should be scared.
Pants.
Like where's the fees coming from?
There's no block space demand. With no block space demand, you don't have security. Like we've talked about this forever. Like just to underline this and make this clear, because some of you guys haven't delved into this, but Bitcoin's issuance is going to zero over the long term. So no more blockchain subsidy. What do blockchains have to do? They have to secure their blockchain either through issuance or transaction fees. So Bitcoin is moving to zero issuance, only transaction fee defense, like military budget. So what does that mean? The military budget is going to go down unless, and this is the argument always given by Bitcoiners about the fixed supply cap and why they're bullish, unless transaction fees will rise to compensate for that. They are not rising. They're going down. Why? Because Bitcoin block space does not have high demand. Why? Because it only does one thing, move Bitcoins from one place to another.
No DeFi.
No DeFi, no NFTs, no other sources of demand for this block space commodity. And so net, this is not sustainable. And I guess at worst, it's the entire chain could like collapse. That's probably unlikely to happen. But what's much more likely to happen, it seems obvious will happen, is other chains will succeed it and have far higher security budgets. And there is a thesis out there of which I'm sympathetic and probably a subscriber that like the highest security chain will win the network effect for this entire industry and become the money for this entire industry. So go security, so go money. Bitcoin value proposition and moneyness and store of value. And so like, what are you building the foundation on? So we've been pointing this out. Other people have been pointing this out, but it doesn't invade the meme bubble, I think, of Bitcoiners.
Yeah, Bitcoin issuance dropping to zero, bullish. Bitcoin fees already dropped to zero, more or less. Like it beat issuance in running to zero.
Yeah, I think Ethereum, it's like over the week, it's like 20 times more revenue from blockchain transaction fees over the last week, something like this. It was like, 15 to 20x.
20 feels like low.
I mean, it depends on the week, right? But it's just a lot more. And there was a period of time where those two networks were neck and neck in transaction fee revenue. There
was a period of time, the majority of our time in crypto, Bitcoin has been in the lead up until the end of 2020 when the bull run really kind of started getting started.
You know what's funny, David, is you know who kind of taught me the value of revenue from blockchain sales?
Was it Hazard?
Nick Carter. It was Nick Carter.
Yeah, it was Nick Carter. Yeah, he taught me that too.
He totally emphasized that, opened my eyes to that in a big way. And it made me more bullish on Ether. So anyway.
Bitcoin has 4% the size of Ethereum's fees. 4%.
There you go, 4%.
Ethereum has 25 times higher fees than Bitcoin.
Here's a Vance Spencer take. Why don't you read it?
2021 narrative. Alt layer ones have solved blockchain scaling. ETH 2.0 is too little too late. 2022 narrative. Alt layer ones haven't been able to scale. Most or all of them have structural issues. ETH 2.0 plus rollups are the most viable way to scale a blockchain in the near term. And he finishes with, funny how things change. L222? L222?
Yeah. Do you think that's a narrative yet? I haven't seen that propagate as a narrative. I mean,
I have not seen that propagated as a narrative,
believe.
But I think he's calling it. Like we're still pretty early into 2022, and I think also it's indicating that people are starting to understand deep protocol truisms that are in this industry and how some of the alt layer ones have violated those truisms, and therefore that's like the structure. I think he's talking about how people are starting to wake up to this.
Well, we'll see if the market catches up to that and wakes up to that as well. This is a take from David Phelps. Incredible to realize that Web3 kind of has to be desktop only to avoid extractive fees from app stores. We might look back and realize the success of mobile apps killed mobile apps because nobody can afford their taxes. Apple is a state. Web3 is an anti-state. Think about that. It's a really interesting take. Like the Apple store, don't they take 30% of revenue?
Yeah.
Of all apps, like all app profits, right? And like Web3 is, disintermediating. It is anti-state. It is anti-middleman. It is anti-intermediary. And so Web3 kind of has to be desktop only. I've never thought about it like that, but I guess it's true. Or like mobile browser only. The App Store model just doesn't work. It's too closed.
Yeah, I don't think that's why Web3 is desktop only, but I'm open to that argument. But I kind of think it's just because like I don't want to use my ledger with my phone. That's weird.
Yeah, absolutely.
Okay, here's a take from Lenny Ratchitsky. Sorry for butchering your last name. There are roughly 27 million software developers in the world. Only about 18,000 of them, or 0.07%, work on crypto or Web3 every single month. Those 18,000 active engineers have created $2 trillion in market cap across the top 100 projects. 112 million value per developer. And we have only $120 million per value of each developer. And we only have 0.07% of them, Ryan. Are we early, Ryan? Is that what this means?
I think this tweet means we're early. Yeah, David.
Yeah, I think that's my conclusion.
Look, all the engineers are getting all the credit. What about the educators, huh? What did we do?
Where's my $112 million?
Some portion of that $2 trillion had to be educators, right?
Yeah,
I want to believe that.
A little bit.
What are you excited about this week, man?
At the end of this week, Sunday, I hop on a flight to New York Brooklyn specifically, because I'm going to be moving there at the end of May. That's the plan. So I'm just going in to dabble around, get a feel for it, explore the Brooklyn crowd. Apparently, the metaverse is being born and birthed in Brooklyn. That's where the epicenter of the metaverse is. Everyone who cares and is interested in Web3 and the metaverse is all in Brooklyn, all in Williamsburg, apparently specifically. So I'm going there for an Airbnb for a week while I plan my move and figure out where I want to live in Williamsburg. And then after that, taking a flight straight to Amsterdam for DevConnect for ETH Amsterdam, which is going to be the nerdiest conference I think I will ever go to so far. And all the core protocol developers are there. Vitalik's going to be there. Danny Ryan's going to be there. Anthony Cesano, I haven't seen him since ETH Denver 2020. He's going to be there. It's over 2 years since I've seen that guy.
He got out of Australia, huh?
He got out of Australia, yeah. So all my friends are going to be there. So I got a pretty fun 2 weeks ahead of me, starting on Sunday. So that's
awesome,
what I'm excited about.
So are you going to Brooklyn because you want to live in New York City, or is this a little bit about crypto? Like you want to immerse yourself in crypto culture and have more kind of in real life crypto friends around?
The latter, that one. I don't care about New York City in of the slightest, and I probably wouldn't be.
You
moving
hate
to
the weather?
Manhattan.
Yeah,
I just hate the density.
Okay.
The claustrophobia. But the number of friends that I have that are all in Brooklyn and Manhattan is just growing through the roof. And so if you want, like I do, want to be around Web3, crypto, DeFi, Ethereum stuff 24/7. I love San Diego. I loved living here, but the crypto scene is just not there.
Does LA has a crypto scene, don't they? A little bit?
But it's an NFT scene, and it's the NFT scene that it's the culture scene, it's the pop culture side of crypto, the NFTs. It's not the protocol side of crypto. I like the DeFi, the DAOs, the protocols, and the people that have the entrepreneurial spirit. So if you are in Brooklyn, if you are in Williamsburg, I'm going to be there for a week starting on Sunday. Come say hi.
There you go.
I don't know where I'm going to be.
Well, Brooklyn for Ethereum Web3, and I guess Miami for Bitcoin. Yeah, that's how it's going.
That's a little bit right. Yeah.
Be good to have you on the East Coast, man. Get on the synchronized time zone.
Dude, you're gonna have to.
I might take the train up. Say hello.
You're gonna have to deal with my ridiculous sleep schedule because I'm up at 6:30 every single morning. I know you're pretty early to rise though, right?
I'm early-ish, but not that early, dude. I'm not cranking by that time, so we're gonna be everything about Bankless is gonna change.
Be synced on the time schedule for the first time ever.
You're probably gonna make me wake up earlier. That's what'll have to happen.
All right, Ryan, what are you excited about?
I'm done my taxes, dude. What a pain. It was just a pain.
There you go. You get the applause for that one, brother.
I guess so. It's taxes in crypto, for anyone, you guys have done this, it's just such a nightmare. It's such a pain in the ass, tracking every single transaction. I can't believe, some of crypto isn't actually treated like a currency, like a money, like the euro or the yen or the US dollar, right? Trap capital gains in and out, your gas transactions, that's your capital gains
long-term
event.
Capital gains on gas fees, yeah.
Yeah, how do you manage when you put liquidity in a Uniswap pool? Is that a tax event? What about staking in ETH, how do you recognize that? And it's just so NFT. I haven't even talked about NFTs. That was, that's probably why I didn't do as much in the NFT world, is because I was every single thing is
but you don't
a tax
sell
event.
NFTs, right?
No, but even buying them, if you buy NFTs with ETH, that's a tax event, bro.
Right. But that's a normal ETH, a normal crypto tax event where it's not any of the NFT complexity.
Yeah, but just tracking all. Anyway, I'm done, and I'm so glad to be done. And I'm hopeful for a brighter future where some of this stuff can be automated and figured out. And
all of the data is on the Ethereum blockchain. The IRS needs to have a push button. Here's your number.
Well, we also need better tax laws. Not every jurisdiction in the U.S. where all of this stuff has to be tracked. There's some countries in Europe where crypto to crypto does not trigger a tax event. Right. That would be amazing too. Anyway.
Right. Well, Ryan, congratulations for making the lamest I'm excited about that we've ever had.
How terrible. You were like, don't do this, Ryan. I'm like, I'm going to do it because that's honestly what I'm excited about. I cannot lie on the show. Hey, I'm excited about this, though, too. Meme of the week. What are we looking at?
You skipped to the end, though. We have to start at the beginning.
Oh, yeah. Go ahead. What's the beginning?
We need the context for this.
Right.
How did this come about?
Okay, here it is. We talked about it with Vitalik. So this guy tweets out, I don't actually know him. He said, we're canceling each other over food takes today. Post your cancelable food take. Your cancelable food take. And he said, I was already canceled over my ice cream plus balsamic take, which is gross. You should be canceled for that.
No, Ryan, it's so delicious.
No,
vanilla ice cream and balsamic vinegar. Oh, it's you can get even
really?
like raspberry balsamic vinegar, and it's so good. Oh, dude, you don't know what you're missing. Vanilla ice cream, balsamic vinegar. I know you've got some in your house. You got to go try it.
All right, I might try that. But I don't know if I'm brave enough to try this. This is Vitalik's cancelable food take. I generally don't drink alcohol stuff, but mixed green tea plus red wine, 85% to 15% ratio is underrated. My man Vitalik mixes green tea and red wine. What's up with that?
Yeah, I mean, I'm sure it's underrated. If it has any ounce of just like being good at all, people are definitely underrating it because no one thought about that combination. And so the meme for the Bankless listeners is that meme where somebody's dual pressing two soda streams at the same time, green tea and red wine, and then going into the same cup. And then the caption is the merge, question mark.
I actually am going to try that though.
This is now the new meme.
The VB special.
This meme is going around crypto Twitter of just like this is now called a butyrant or a VB. So you can go to your local bar. If they don't know what this is, just tell them. And so that this is now the new thing. I think this is actually just what a bougie version of a Four Loko is. I don't know if you remember Four Lokos, right?
No.
But they were basically. They were like what high schoolers would drink if they didn't have a lot of money. You would basically like pay like $4 for one and it would kind of get you wrecked because it was both caffeine and alcohol and just like syrup at the same time.
I got it.
So like, get the alcohol, the caffeine from the green tea. You get the nice red wine, mulled wine flavor, I guess.
You're selling me, but it's only 15% red wine. And I was like thinking about what color could this possibly make in your cup or in your glass, right? You got the green tea look plus red wine. That's got to make some kind of like gross looking brown thing.
It's got to be like, because green tea can be like mostly water. I think it's closer to a rosé.
Well, maybe Bankless listeners, you guys can try the VB special.
I think
report
this
out.
is
Tell
going
us
to
what you
be
think.
a hot topic at ETH Amsterdam. I think everyone at ETH Amsterdam will definitely be drinking the butyrants.
When we do the live stream, because we're live streaming the merge when that happens, we are all going to be drinking VBs.
Oh my God, that's exactly what we're going to be doing. It's going to be like 7 a.m. and we're drinking green tea. That's a great morning drink. If you have to drink alcohol, I think green tea and a splash of red wine is a great way to wake up.
Okay, but you can't say that until you've tasted it. You can't say that yet.
Dude, it's called a VB. I'm going to love it.
All right, guys. This has been the meme of the week, and this has been Bankless. Of course, none of this is financial advice. It's not drink advice, beverage advice either. Please do not cancel us. That was Vitalik who said this. But of course, ETH is risky. Bitcoin is risky. You could definitely lose what you put in. All of DeFi is risky. So are your beverage choices, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.